Can you invest in UTI Focused Equity Fund NFO? It's another NFO which is in the market. So let's look at whether is it good to invest. Hi, hello, this is Ganesh Through your stock market profit coach and author of the book One Page Stock Market Plan. And today I'm just going to share about this NFO which is going to get launched, and the period is from 4th August. NFO is launching on 4th August and it's ending on 18th August. So that is the time period you can look at investing as a new fund offer, and the NAV is as usual is 10 rupees, and the expense ratios as usual up to 2.25 percentage as it is a beginning of the fund. And as going forward, if the fund is accumulating more than 10,000, 20,000 crores, the expense ratio comes down to less than 2% and eventually around 1.5 and even lesser as the progress as the it is goes. The as far as equity is concerned, this is how the expense ratio everything is all about. And let's look at what this fund is going to offer, and I'm just going to share the presentation what these people had provided, right? UTI people had provided. Just give me a minute. I'm just sharing. I'm just sharing one second. I'm just sharing. Yes, now all set. Let me show you the presentation about which is more important, and this is all about UTI Focused Equity Fund. I think now you are able to see, right? So this is the UTI Focused Equity Fund, and this is the advertisement. You can see the August NFO opens on 4th August, and it is up to NFO closes on 18th August, right? This is the the first point, and the next thing is what they are going to do. That is the most important part. It's a concentrated portfolio. Just look at the concentrated portfolio and leverage of research expertise as usual. Everything will do an optimal portfolio. This is the most important. This is the reason it is called as focused, because it's going to be a maximum 30 stocks across different market capitalization and sectors. Irrespective of sectors, there are more than 20, 25 plus sectors, and irrespective of market capitalization, they are going to find a good quality stock and stick with it. And it's uniquely positioned potential alpha creation. That is the point. Alpha is going to get created. It means if the benchmark returns is 12%, how much alpha it can create? Is it 5% or 10% or 20%? That is what. So our benchmark is 12%. Can they create extra 5%? That is what it's all about. And let's look at the other features. And return divergence within select sectors. For example, NBFC. The peak one is giving around 42 times, whereas the average ones are giving only four times. So stock picking is very essential when you are focused on fund alpha. So that is the reason if you are picking Bajaj Finance, it's going to give you maybe 42 times. But if you are picking up a second company, it may be giving you just 4 times. So which stock you are finding, and when you are churning, when you are exiting. So if it is a 30 focus stocks, you will be picking those 30 stocks alone. You are not going to change it. And similarly, look at manufacturing industries. Whereas NBFC you are seeing 42 times, whereas manufacturing, just look at 8 times returns or 175 times the returns. That is the kind of divergence you will see. But this fund is going to focus on picking the right stock. And this guy is having the experience. This is a fund manager, Sudhanshu Asthana, and he's having the experience of close to 2 decades in the industry. So that is the reason he is holding this. And this follows a growth blend of growth and value style with the growth, right? So growth tilt, which means growth is going to be the focus. And in the next 2 years, will this company grow to the next level? That is going to be the major point for this UTI focused equity fund. And they're going to use cyclical opportunities, because it means cyclical means right now the cyclicals are in demand, infrastructure, cement, and all these companies, and transformation. Suppose a company is getting re-rated, not derated, re-rated, meaning going from one level to the next level. And that is one of the important time you should get in, so that you are making so much huge returns. And what are the exclusions? If the ROC is negative, there are companies where ROC is negative and there are inconsistent cash flow if it is negative, or every year it is varying a lot. And sustainability, if the visibility is not good, say if it is a cyclical and the next few months are going to be challenging, they will not be investing in that. And companies with high debt, they are going to avoid, which means stocks like Adani may not find a place. That is the reason most of the mutual funds are not investing in Adani stocks as such. And management issues, if there is any corporate governance issues or management issues, they will always exclude, and even if they had stayed invested, they will exclude and come out of the fund. So this is one of the important things when it comes to, because this is very much clear in this presentation. So this is one of the reason you can always go for company which is sharing everything in a transparent manner. So if you look at, there are 15 stocks which got exited due to delisting, liquidation, shutdown, or mergers, and in the last 10 years alone. So which means you should avoid these kind of companies in investing. So are you clear in doing that? And these are the companies which give 25 to 30% CAGR. So you should be very cautious before investing in these kind of companies, right? And you should find a middle point like a 12.81 CAGR. That is the most important line. And so all the, if you look at 227 companies put together, they are going to give you in this range, and remaining companies are in this level. So what you're going to do out of Nifty 500, this is the stat given by them, right? More stocks with such outcomes and exit at the right time. This is very much in that, very much in that zone. So you should be very clear when you're picking in this stock, right? And exclusions, how to exclude stocks which are giving negative returns, management issues, all these points are very much essential. And high ROC companies, just look at that. We just have 32 plus 75, 100 and 200 odd companies are giving you much bigger returns with good transformational status and everything. How to pick those things, that is a challenge in stock market, and this mutual fund companies are doing that, and this fund in particular is doing that, right? So out of the different things, how they are going to perform, this is a record, this is what they are going to do. Their portfolio is they have a proper thing. They are going to check the OCF and ROC, what is a return on capital employed, and OCF is operating cash flow, is it positive, and how far it is performing, all these. So they have a standard process they are following, they're going to follow, right? And sustainable growth and transformational opportunity, they have a plan, and how they are going to implement, this is what they are provided. And this presentation, you can check it out on UTI website. And if you look at, the investment style is clear. Stock selection is bottom up, and market cap based on the market. It can be mid and small or large cap. Based on that, they will be selecting. And internal limits. Single stock is not going to exceed more than 9.5%. Even SEBI mandates that. And portfolio turnover based on the strategy, based on the market conditions, they are going to do. So this is something like concentrated, a diversified portfolio. And if you look at, this is what they are going to do. Financial services is going to be 29%, consumer goods, for pharma, IT, automobile, metals. So diversification is already there in place. So on return on equity is going to be in the range of, just look at price to book, what will be the metrics, and price to earnings, PE ratio, and return on equity. All these they are mentioned, and the return, everything is clear, right? And UTI focused equity fund, based on blend of growth tilt. So that is something like newly they are launching, and UTI is something like, this is what they have, the UTI core equity, which is purely on relative valuation. And if you look at flexi cap fund, it is purely towards quality growth and cash flow. And this is something like blend of growth tilt, value and growth. So they have a clear plan like what they are doing. So So this is something like in every area they have a, they are just giving an idea like where they are going to do. This is about housing segment, how it is going to perform, two wheeler and apparel retailer. I think Beta as well as Relaxo footwears will come in this, and global player with local flavor. So all the companies which are MNCs, they, for example, it can be Nestle, it can be Gillette. All these will have a major impact. So this is what they are going to do. So what you are going to do is, can you invest in UTI focused equity fund? It purely depends upon how do you want to perform. The concentration is huge, 30 stocks. That means some of the funds will have 50 plus or 60 plus companies in the name of diversification. This is concentrated, and they are very much clear how they are going to go, and they are clearly explained in the portfolio, in the presentations. So my suggestion, if you're not invested, go for an SIP or go for a lump sum investment, but please be clear, you should stay invested minimum of 5 plus years. Market is the high valuations, and they are coming up at a peak time. So stay invested, and in that case you can go for it. And please be cautious, is this one for you? Understand and then invest, right? I am fee registered mutual fund distributor, and this video is for educational purposes. So hope you liked it, and please share this video with your friends so that they also know about a new NFO and how to analyze mutual funds and everything. Thank you so much for watching. uh, we'll meet again at another video. Thank you so much.